everybody, and welcome back to the PLDC Wealth Explorer. I'm Michael Anthony, and with me, as always, my esteemed co-host, Gabriela.
Hi, everybody.
We're so glad to be finally back with you all after some time away. We know it's been a while since our first episode, but we thought it was important to kick things off with a bit of an update and where we've been. So, Gabby, would you want to tell everybody where we've been and what we've been doing?
Yeah, so it's been quite some time. Originally, when we had the idea of starting the podcast, we thought to do it a lot more on a consistent basis. But you don't realize how much it takes going into a podcast, what to do, and all. Basically, how much preparation it is. So, in the meantime, since we've been trying to figure out every episode, we've been full into work. We've been doing our life insurance exam, which is now officially complete.
Thank God.
So we're just finalizing a few things with the AMF.
Yeah.
But yeah, definitely didn't realize the effort a podcast would take, you know?
I wasn't too worried about the effort, the podcast, but yeah, life did get in the way. We had to get our licensing for the life insurance, and we had to be working on all the client files and make sure everybody was doing well, especially during these times. And
But we've been doing good things,
We have,
obviously.
yes.
We've been keeping up.
very busy.
Yeah.
Yeah.
So it's been fun, but we're super happy to get back into it. And we figured no better time than now.
Oh yeah, during
seeing-
the turmoil and craziness.
Absolutely. Seeing that there's so much talked about, so many opinions going on, we felt like, you know what, maybe we should come here and not necessarily just give our opinion, but
Clear
talk-
the air and like help people out a bit. Yeah.
Exactly. So just hopefully give anybody some reassurance that, you know, they might be looking for, and answer maybe a few of your questions that you've been contemplating or holding off on asking because you're just waiting to ride the wave. So we'll try to get into that today.
Yeah, we've definitely been getting a lot of people coming to us. We've gotten a lot of emails, phone calls, especially people are like, "What am I going to do right now?" And like, I think it's best let's set it up with what's been happening in the news and what's been happening with politics and all that, and how we got to this place today. So since New Year's, what's been going on?
Yeah, so much went on since January 1st, 2025. And we're almost done the first quarter of the new year.
That's right,
and quite a bit has gone on. So obviously in the US, I mean, Donald Trump is back into his second term as the president of the States. And, you know, he's been getting to work.
He's been working a lot. Yeah.
Absolutely. So with that, I mean, once he came in, you know, obviously he started his negotiations or started implementing quite a bit of things.
Mhm.
On the Canadian side, we had Trudeau who resigned, and now approaching, we have
Our own election.
coming up. So quite a bit of things happening in terms of politics, and obviously with that, there has been quite a bit of things going on the market. So today, we're mostly trying to steer away from the political side. You know, we're not trying to give our political opinion. We're not politicians. We're not trying to be.
Yeah,
But we're definitely trying to put some focus on what does it mean for us as investors.
that's right. So as we mentioned, the U.S. elections, and then Trump got inaugurated. Then he started implementing his program that he had mentioned from before he got elected. So tariffs, and essentially, this is the main thing that everyone's been listening to for the last few months on the news and everything. So why should we care about it? What does it matter? What's the big deal?
I mean, listen, the big deal, it depends on your sentiment, how you view certain things going on. Obviously, tariffs are meaningful given the context of the situation. So I think it took people, I don't know on what level, if it took people a little bit by surprise or a lot by surprise on the magnitude of how he is negotiating these tariffs and how he is implementing them. So I'm still not sure if people feel like, I think most people feel more taken aback from, wow, like I can't believe he's doing this versus most people expecting it, because he did mention, you know, imposing tariffs while he was elected, and then between his election and his inauguration of being the president of the United States, naturally. So we did know to a certain degree there was going to be a certain change. We knew he was coming in to do some form of business format, remove kind of bureaucracy rather. No,
Hmm.
excuse me, not democracy, but
He
bureaucracy.
might be doing that too. We just don't know
Yeah.
yet.
Anyways, but we did know that he was gonna kind of remove bureaucracy, try to
Yeah.
make things a little bit more straight line process, and naturally he's been doing that. So definitely he stayed true to his word. But I think the magnitude of how he's gone about things, I think for the most part took people by surprise.
Hmm.
And obviously you have your counterparties being Canada, the US, Canada, Mexico, China, India, and everybody else around who's
Hmm.
feeling somewhat attacked,
Yeah.
right? They feel like, why is this being done? What do you want? Like, what is your end goal? And still to this day, we're filming on April 14. We're not
Yeah.
quite sure what the actual end goal. We know there's definitely something under his sleeve that he wants. But what does this mean? What do the tariffs mean for Canada specifically? I'm not going to get into the other countries. I don't know well enough about them to be able to speak about it. But in terms of Canada, it means pressure on supply chain. If U.S. Counterparties were importing from Canada, they might have to reduce their imports because obviously, what does imports do? It increases costs of goods being bought,
Hmm.
right? And if costs of good being bought are increasing, well, that means cost of good being sold will also increase. So naturally, businesses are being faced with the challenge of, do I pay this tariff and keep the increase within? But if I'm keeping the increase within my company, I'm reducing my profit margin. But if I'm passing it on to my consumer,
Hmm.
well, now it becomes a consumer issue. And obviously, on a global standpoint, it starts to affect the consumer more and more,
Yeah.
right?
So he's been causing a lot of volatility essentially, and as you said, it's either going to get passed on to the producers or the consumers.
Exactly.
Um,
But to add on to that point, it's not that he's just creating the volatility, he's creating uncertainty within the company in today's standpoint. Because
mhm.
obviously, and he said this before, Donald Trump has said this before, that the tariffs will help the US in the long run.
Yeah, he's a short-term pain guy.
But short term, what's happening is these companies, they're faced with, how do I readjust? Like, what happens in a situation where, oh my God, all of a sudden I'm faced with this tariff, this restructure of my cash flow. So now I have to think, like, what is my business plan?
Mhm.
I cannot keep going with the same formula because clearly it's gonna affect me. It might, if it's gonna affect me in terms of profit margin, it's gonna affect my consumers if I pass it on to them, and obviously I might reduce my demand.
Yeah.
So unfortunately, everything that's going on right now is based on one person
Mhm.
and the decisions that he's making. So if he decides, okay, I'm going to put an end to the tariffs, well, then there's no restructuring the business plan.
Yeah.
But if he decides, like, I'm going to keep going with this, I think this is the best for the US economy, again, in the long run.
Mhm.
Well, now in the short term, there's obviously going to be, um,
It's gonna go crazy. It's gonna be up and down, and you know what that means for our clients especially, and that's why we've been getting called a lot and asked what's gonna happen to my portfolio when they see markets one day going down like crazy, the next day going back up, back down, and essentially the one thing that we want to come on and help reassure everyone is that most of the times when you're gonna have your portfolio set up, a lot of what was gonna happen, the fund managers were uh, placing themselves in a way to hedge against these kinds of risks. And it's surprising, but also now the fact that we have Mark Carney as the premier, one thing that I've heard that he's been doing to hedge our risk of getting tariffed as well was buying into American bonds and having Europe and other countries also buy American bonds and tell them, look, if you guys start tariffing us, we're going to eventually do a slow bleed of the bonds. And eventually, discount it will make the American dollar weaker and weaker and weaker, where it will negatively impact the US side. So like what the prime minister was setting up to do, and what the fund managers have been doing, hedging against the downside risk. And I think like we've been helping everyone position themselves to mitigate that risk. Our portfolios have gone down half as much as the indexes, which is fantastic. But that's it. Like all that said, that volatility, and it's nothing new. Even in 2008 and then 2020.
They represent one portion on a timeline for sure. But I think, like, and getting to your point of what Marconi's been doing, and they're retaliatory measures, right? Canada's not going to sit still
No.
and just and take it. Obviously, they're going to try to do things to better their own economy. Obviously, when you're faced with certain issues like being tariff,
Mhm.
you can't just sit still, right?
No.
So
Yeah.
obviously, like you said, in the short term, there is like uncomfortable moments, and that's 100%. It's not gonna be smooth sailing for the rest of the year because, like I said earlier, we don't know how it's gonna plan out, right?
Mhm.
There's so many things that we don't necessarily know. But two is depending on what's being said and what's being implemented, well, that will cause a reaction to what's being put in place. But going on to your point of Canada, it is super important for us as a country to grow stronger, right? So
Mhm.
what Mark Carney is doing right now, and along with all the other premiers, is they're trying to hold a position where they're bettering Canada, and I feel like we've lost that for a bit of time.
Yeah.
Naturally, which I mean, it is what it is. I guess at this point, you could have your own opinion on this, and I'm sure you do. But for Canada, the way I see it, this is a moment of opportunity.
Mhm.
Because if we look back on the last X amount of years, I'll use 10, but in the last 10 years, I don't think Canada is where it should have been.
Mhm.
And I think sometimes when you're faced with pressure, it's a good time to look in the mirror and say, what should I really be doing right now? And I think Canada right now, they're pointing a mirror at themselves. And I hope anyways, with this new election that's coming in the next couple of weeks, that all the premiers, they could really gather together. That's something I really appreciated when they made their way to the US, is all the premiers of each province and territory, naturally, they gathered together and they put Canada first,
Mhm.
which is something I felt like hadn't been done for a long time. It was always province for province, and then we have a federal election, and I think this is why people were so distant from going to vote back then, is because it just felt like that. It just felt like, what does it matter if I go to vote? I feel like this election is different. There's a lot more of an emotion behind this election, and I think it's a lot more Canada first, which it should have been. And I hope that the negative that's been coming from the US, it turns into something positive and it brews going forward.
Mhm. Yeah, regardless of who gets voted in, honestly, I feel that it's going to be a definitive election. We're going to have a lot of change put forward because before that's it, we were too comfortable, and having somebody to challenge us, just like in life, if you don't get challenged, you
Absolutely.
don't become your better self. So hopefully, Canada will become its better self, and as well the rest of the world, in light of this tariffing and how this, like, even China's like, we're being
Being called
told
the 51st state.
being called the 50. We're not the 51st state. We are a sovereign country. So yeah, it's gonna be a definitive moment in time for us as
But I
Canadians.
also think it's like we need to stop acting like we are a 50.
I mean, it was, again, that's why you're saying, like, it reflected the mirror against us. Like, are we really like the Americans? Or are we not? And a lot of people are starting to wake up in that sense.
Yeah. So I think like a whole positive thing that, if you're listening to this podcast today or whenever in the future, that you could take away is that this moment of difficulty, it should be something that brings hope to Canadians. And again, I'm, give you my personal belief, but I hope that Canada grows from this. I
It
hope,
should, yeah.
we are rich. We are rich. We're huge in land. We have a lot of natural resources. Like
Mhm.
any business right now, if you look at a business's balance sheet, you look at a business and you say, what are a business's potentials?
Mhm.
If a business has a lot of potential, okay, how do I optimize this potential? So when I look at Canada, has so much potential,
Mhm.
but it hasn't been optimizing it, and that's why it hasn't been looking so attractive
Mhm.
in the last couple of years, or quite a few years. But I think going forward is like, all of a sudden we're faced with pressure, and because we're so rich in all these natural resources, land, people, we're smart people, Canadians.
Mhm.
So if we could really flip the script here, we won't need the US as much as we've relied on them for the last couple of years.
So we talked about politics now, and we touched a bit about the markets themselves. But what does that mean on the broader spectrum? Like leading into the markets of 2025, what do you think?
As much as the conversation and the sentiment feels very, very negative, um, the market right now feels positive. And let me explain that. Okay.
Because it's not.
It's not.
It's
It's not. It's not green right now. It's not really 100% red though. Like
Let's say it's in the orange.
it's
Let's
in the or
in
it's
the
between
middle.
green and red right
Yeah,
now.
green
Okay,
and red. Yeah.
and it's probably gonna stay like that all year. Okay,
Yeah.
so we do expect that. We don't necessarily expect a down year. We
Yeah.
don't necessarily expect an up year. It's volatile. It could be one or the other.
So wait, is this word appropriate? Opportunity.
That's where I was getting at.
Uh-huh.
Absolutely.
Okay.
Absolutely. And somebody who's maybe nearing retirement might not feel the same
True.
way, right? Somebody who's planning on retiring in 2 years, 3 years, or who is currently just took the retirement, don't worry.
Yeah.
Don't worry, because naturally, if you have your financial plan put in place, we even accounted for years of volatility. Because let's take it back 3 years ago, we didn't know we were going to be in this situation in time, right? And like we don't know where we're going to be in 3 years from now. So in the short term, all financial plans are prepped for the account that if in the case there is a down market, don't worry, you have your liquidity. Because remember, you're not withdrawing 100% of your money today.
Nope. Just
Right?
little
And
bit
like
at a
you're not
time.
withdrawing 100% of it in the next 3 years. So obviously we've accounted for the next 3 years and so on and so forth. So we've broke down your portfolios to be short term, basically
Conservative,
liquidity.
Yeah, liquid.
You have your medium term, which is more conservative, and obviously you have your long term, which now depends varying on the type of investor you are. Maybe it's balanced, maybe it's a bit more aggressive, etc., etc. So for those who are retired, for those who are nearing retirement, like very, very near retirement, you might not feel the same sentiment as opportunity, but there is no need to panic if you have your financial plan in place. And obviously, the recommendation is you have questions, ask them. Don't assume.
Yeah.
Don't assume. Ask your questions. Let's do your reviews, and stay on top of things. I know sometimes like an hour for yourself once every 4 months is not a lot of time, and it could definitely be done.
Yeah. The one thing that I've been trying to help most of the clients with is knee-jerk reactions.
Mhm.
They see a lot of negative things happening in the markets, the news, and then they're like, oh man, I got to get out of this right away because this is not good. But in reality, we've already taken the steps to make sure that things are
Absolutely.
because that's how their plan is, and also based on what their financial goals are in that moment. So if you're nearing retirement, yes, like you said, we go more conservative, make sure things are more liquid and they have that available when they need it. And the rest of the portfolio, depending on how they're cashing out,
Exactly.
we structure it appropriately.
And for our younger clients,
This is where the opportunity comes in.
our Michael aged clients.
Oh, okay, 40, she's saying.
So for anybody else, really, this is so much opportunity. And obviously, there is cost of life that is super expensive naturally. Making sure your budget is down packed. But finding any extra dollar you can to put in place for your future, it will be a very strong benefit going forward in time. And particularly to those who are at home and living under their parents' roof, now is the time. If you felt before that you were never going to make it, I'm here to say that we've re-put back opportunity.
So that's it. People my age, good time, or younger, very good time. Obviously, the fundamentals, have your 6 months of expenses saved on the side. And then anything surplus that goes into those investments. So based on what your needs are, what are the fund managers able to do right now for those that are able to take advantage of the opportunity, the investments, and that long-term growth?
Absolutely. So obviously, like we spoke earlier, the tariff conversation, the whole political conversation, the I don't know conversation, it is very overwhelming. We're not going to put that to the side. We're going to embrace that as well. But I want to reassure people that they're not listening to the news. They're listening to what's going on in the States, obviously, in terms of a political standpoint and in the tariffs. But they're also sitting down with the companies
Yeah.
and wondering how are they responding to the tariff implementation, right?
Yeah.
And now I go back to, okay, what is your business plan? What is your balance sheet? What is your cash flow? What are your future objectives? And how do you plan to respond in the long term? And that's what they're doing.
Yeah. They're always looking for that undervalued company,
Company.
but it's worth more. And especially in that market landscape, their fund managers have very solid thesis.
Exactly.
To be
Well,
able to
they
grow.
have also, you relate it back to medicine. What's super important in medicine? It's not just the tools, but it's the research,
Mm.
right? So the fund managers have the same equivalent of research that large medical institutions have as well. So they're doing the research, and their research is not based on what CNN is saying or what LCN is saying.
Yeah.
Now, if you know why I'm laughing, you know why I'm laughing. But it's not based on what CNN is saying or what CTV News is saying or what the article on Bloomberg wrote today.
Mm.
They're actually analyzing the company's financial statements. They're saying, okay, there's three important factors that will make them decide what's going into the fund and how they're investing. The price. So what is this company currently being sold at? 2, to justify the price that it's being sold at, what are their earnings growth, their price to earnings ratio? Super important.
Mhm.
So now maybe I'm going to break this down for a visual for you to understand is, say there's a revenue property. Revenue property is being sold for $1 million.
Yeah.
The $1 million is the price. But the revenue that the revenue property brings in on a yearly basis is $50,000.
Mhm.
Now the property next door is selling for $800,000, same revenue.
Mhm.
Which property are you buying? By logic, the $800,000
That's
property,
right. It's cheaper,
right?
and I can get
It's
the same
cheaper. It's paying down my mortgage faster.
Yeah.
It's more profitable, not the $1 million property. So what just happened to the $1 million property? It's overvalued.
That's right.
So it's either gonna have to bring down its price, or it's gonna stay there and it's gonna grow at a much slower rate than the $800,000 property.
Mhm.
So that's what fund managers are doing, but on a company basis. They're evaluating what is the year-over-year growth. Has this company been growing? Do they have the potential to continue growing, right? And then they're looking at dividend yield, and dividend yield is basically, are they able to pay dividends, right? So
Yeah.
super, super important. So they're not just taking into account the tariffs and what Donald Trump is negotiating between India or China. Obviously, it has a factor, and I'm not going to say it's being ignored, but it has
It's not the critical factor that's causing them to choose. And it's showing, like, the portfolios that we have and the funds that we help select for our clients, they're doing good.
exactly. So the funds we choose to select, they're not based on just returns. Obviously, returns are important, but they're based on this ability to do this research, right?
Mhm.
Because obviously research costs a lot of money,
That's
and
right.
being able to find which company to invest in, it takes a lot of time. Like, they're doing this with every single company that is in your fund.
Yeah.
And some that are not, because they had to figure out why they didn't want to put them in their fund. So obviously this is what fund managers are doing, and this is what maybe should give you a little bit of ease on how to take this news and how your investment portfolio is going to go forward. It's not just based on what one man is saying. At the end of the day, he's going to make his decisions.
Mhm.
We're going to have to obviously readjust as an economy. We're going to have to readjust within, or the fund managers, not us, but the fund managers are going to have to readjust within their own funds. But, their sentiment to us, which is a lot more important than
Yeah.
consumer sentiment, is they feel super positive.
Yeah.
Obviously, they are expecting volatility. Like I said earlier, not sure if it's a green year or red year,
Mhm.
but time will tell. But ultimately, it doesn't matter if this year is a green year or a red year, because in the long term, it'll just represent another timeline.
Yeah. From all the calls that we've been on with the fund managers, most of them always seem super excited about
Absolutely.
what's happening this year. So it's good. It's going to be a good. It's a positive outlook, and honestly, I feel that a lot of people need to hear that, because that's it. Those knee-jerk reactions. Oh my God, this thing's happening, but they have it under control. If you stick to the plan that you set,
And we've seen this before,
It's
right?
true.
And we've said this before. Obviously, I wasn't around to explain this to clients in 2008.
neither was I. But
But 2020 was another
That's
much
right.
more recent similar circumstance, and if you just waited.
Mhm.
And something that was really interesting, and I don't know if you're going to be able to bring this up after,
Mhm.
but every year in the market there is a moment of down
Of course.
every year. And if you even analyze that on a per company basis, every company, and one of them in particular that I'm going to give an example to because I was looking at it the other day, Amazon.
Mhm.
Amazon every year since it's IPO'd into the market has always had a moment of down in the year.
Mhm.
So whatever the month may have been, they always had a negative month. So these are super normal things. So to give you back that perspective, just because it's negative right now doesn't mean it's going to be negative forever.
That's true.
Go back to why you started investing, why you wanted to invest. If you're not investing, again, proof that now is a good time. Proof that timelines, they do their thing.
That's right. Yeah. So with all that said, I think that's a lot of information and a lot of things that we said. I hope we didn't ramble on too much, and apologies if we did, but it was a lot to cover. But the good thing is that we just want to remind everyone, like, stay the course. One of the key takeaways of the is don't go crazy, don't jump at it out the window because you're seeing things going down like crazy. It's normal, cyclical. It's
Mhm.
gonna happen. But the positive thing is that we're there to have your back. So we're there.
Absolutely. Good word. Cyclical. It is very much cyclical. Obviously, piece of advice is um, naturally make sure you're always in communication with your advisor. Um, get it done if you haven't gotten it done. And by that, I mean your financial plan or your
Mm,
retirement plan. And if you're not understanding with two of those means,
yeah.
ask that question.
Yeah, definitely.
But
Contact.
also for the young ones out there, is you know
Now's a good time.
now is a great
Don't
time.
If you're watching this, you're young, call us right away because now is a great
Now
time.
is a great
It's a
time for
fantastic
sure.
time.
And ultimately, take the headlines as much as you can with a grain of salt, and just stick to your strategy. Remember why you started, what your goal is. And it's the same thing, like, sorry, but it's the same thing like when you started your business. If you
Yeah.
started a business, when you started a business, you were encountered difficulty
Always
at
challenges.
any point in your career, your business, whatever the reason may be. You didn't just quit or change the course because it got difficult. Naturally, you surmounted that difficulty with
Mhm.
time, and it's really the same thing. And I have this in my office, but it's hold the vision, trust the process.
Every time I call her, I see this behind her, and I'm like,
And
oh,
it's true. It's true. Nobody's gonna believe me right away, but it's true.
we'll post the picture at the end of the video.
Absolutely.
So thank you very much, everybody. And we appreciate you guys tuning in. Again, second episode, we are definitely trying to make them more regular now that our time is a little bit more free because we're not constantly studying for an exam. We'll be able to do these more often. If you do have any ideas,
You could even email us directly.
yeah, I'll put it on the screen right now. You could see what it is. And you check in our description, comments. You're always welcome to do that. We love seeing comments. If you like the video, like it.
We
We sh-
love the feedback
we
too.
love the
Honestly, the
feedback.
feedback from the first episode was so appreciative.
Yeah.
Just so we could, obviously we're rookies at this, or
Yeah.
me more than Michael, but
Yeah. If you do comment, then we'll know you watched the whole video through, and we appreciate that. So thank you. But if you didn't comment, I mean, it is what
it's
it is.
all right.
We appreciate you. Take what you want in terms of knowledge nuggets from our conversation and roll with it. So with that said, thank you very much, and hopefully we'll see you again soon. Have a great one.
Catch you next time.